In this video, I will be speaking about EUR CAD. Now, as usual, to keep the video as educational as possible, first I will be covering the technical aspect of this market, then we will move to the order flow, and by the end of the video, by using the combination of these two different types of analysis, we will try to understand where we have the highest probabilities for the next potential move here on this pair. Now, starting from the monthly time frame, what we can see is that we have a market which has just broken above a quite important structural level. In fact, this zone was acting as previous monthly support turned resistance here, which was once again acting as resistance here. However, the market has now broken above it. So as we got a break above resistance, we could expect a retest of this previous resistance turn support before then getting a potential rejection to the upside. Dropping down on the weekly, what do we see? From a weekly perspective, we can see how this red candle here created a level of previous weekly resistance, which is now turned support. If we will get a retest of this previous resistance turn support, we could expect at that point a potential rejection higher for the market to complete this impulse correction and impulse pattern to the upside. Dropping down on the daily, things become even more interesting because what we can notice is that, first of all, the market is testing precisely the previous daily high. Now, the previous daily high is previous resistance, which now that the market has broken it to the upside, is acting currently as support. So, what we could expect from this level is a potential rejection to the upside. We can also notice that since we have an impulse, if we want to measure the correction, we have to take our Fibonacci from the low to the high of the impulse. And if we do that, we can see how we have a perfect 0.32 Fibonacci retracement lining up exactly with the previous resistance turn support, creating confluence of support at this level, which we could in fact expect this market to want to reject to the upside. Now, if we go and see what we have when it comes to the commitment of traders, so the COT data, which is what the non-commercials, so the biggest speculators in the market are doing, and we check the data precisely for the euro, we can see how even though in the short term net positions are getting decreased, in the long term we went from having a negative net positioning with more shorts than longs from an institutional perspective to now having a positive net positioning with more longs than shorts. So the euro is actually getting quite bullish. We check the CAD and we can see how on the CAD net positions are getting decreased, reaching some of the lowest levels that we had so far. And a strong euro and weak CAD is exactly what we need for a potential rejection to the upside. So the way in which we could be approaching this is, as usual, by being reactive and not predictive. The monthly, weekly, and daily combined with the COT data, those are the best time frames from a directional perspective. However, when it comes to confirmations and entries, the best time frames are the intraday time frames, so 4 hour and lower. Therefore, what we could be doing, potentially also with students, is monitoring price action from an intraday perspective during this move to the downside, waiting for the market to shift from an intraday bearish market as we would have to an intraday bullish market. And if the market would shift from an intraday bearish to bullish market and provide to us one of our valid entries, at that point we could be looking for a potential rejection higher for the market to complete this impulse correction and impulse pattern to the upside. Now, if you enjoyed this free analysis education and update, make sure that you drop a like and a comment. It really does support the creation of more free analysis education and updates for all of you, and I will see you in my next breakdown.